overall, my outlook on real estate is positive. Real estate has a lot of demand drivers behind it, particularly residential real estate, multifamily, student housing, senior housing. People still need a place to live. And that, I think, is the biggest piece of the demand driver, right? I mean, whether or not rents continue going up, occupancy will still be there.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why? Hi everyone, I'm Jason Balara, and this is the Know Your Why podcast. Today I'm here with Greg Bronson. Greg is 19 years in residential real estate and has executed over $2 billion in transactions across student, multifamily, and senior housing sectors. He's also an adjunct professor at NYU. Greg, I want to stop there because I want to let you tell your story in your own words. But first, I want to say thank you. Thank you for coming on the show. Thanks for taking the time out today. I appreciate it. I truly appreciate your time being here.
Thank you for having me, Jason. I'm very excited to be here.
Awesome. Well, let's start with your story. Let the listeners get to know kind of where you come from, what brought you into real estate, and then we'll go from there.
Sure. So,
Sure.
as you
Tony,
noted,
wanna go
I've
first,
been in the
or-
industry for close to 20 years now, both on the debt and equity side. I started at Lehman Brothers out of college. They don't exist anymore. And it was a very good place to get a foundation in the world of finance broadly, but I knew I wanted to be in real estate. And after a few years there, I transitioned to a commercial real estate debt investment firm that was investing in all sorts of structures and across all property types. So we were doing CMBS investment. We were investing in whole loans, B notes, B pieces, mezzanine debt, preferred equity, and across all of the major food groups: office, retail, multi-industrial, and hospitality, as well as other property types that are a little bit more alternative, like student housing, senior housing, self-storage, and so forth. After about 5 years there, I moved to a private company backed by a family office that was investing in senior housing operating company and real estate investments, as well as diversified real estate out of another pool of capital, including student housing, multifamily, retail, self-storage. And from there, I moved to run the real estate program for a Middle East-backed private equity firm that was looking to diversify out of just senior housing and looking for other alternative real estate exposures. And I built a student housing platform for them from nothing to over 9,000 beds through 10 acquisitions and 2 ground-up developments, and have been focused on residential real estate throughout the time since then and even prior. So I've closed a handful of student housing transactions and senior housing, and have been working in the multifamily side as well. As you noted, I am an adjunct professor at the Shack Institute of Real Estate at NYU, so I teach young professionals and have been doing that for about 7 years now. And it's a lot of fun. It's a very rewarding experience. And, I love real estate. I love the residential side, especially because you're providing a property to people, but you're really providing a service to them. You're providing a dwelling, and depending on your operational orientation, that can be high end, that can be more value driven. And I like the more value add side of things where there's an opportunity to do something with our hands to improve the asset, improve the experience for the residents, and deliver a return to our investors. We're also active right now in the credit space where we have a deep history. As I noted, I started in a commercial real estate debt investment firm, so we're deploying a private credit fund right now where we're taking advantage of some of the dislocation in the banking environment and providing investors a 12.5% IRR paid on a quarterly basis. We're offering 90-day liquidity, and our 10%, Ashland Capital's 10%, is in a first loss position. So there's additional equity protection outside of the equity underlying each loan. We are actually putting ourselves in a position to benefit the investors in the case of a black swan event.
Yeah, that's excellent. What was your degree in?
So I was in politics broadly. I took a political economy certificate, and so that was an interest of mine, but it wasn't where I wanted to be professionally, so to speak.
Mm-hmm. Yeah, because you mentioned that you sort of always wanted to get in real estate, and so I wonder, sort of what put that in your mind? Where did that thought come from? I think, everybody, well, not everybody, but a lot of people have some person they knew, something in their background, something like that kind of, leads them in that direction. I wondered what that was for you, Greg.
Yeah, it's exactly that. Someone that I knew. So I have a family friend who's been in real estate for his entire life, and had explained to me, what his interest was and how I could think about a career in the space. And he was a mentor to me, is a mentor to me, and kind of helped me understand the opportunity and got my interest going in the space.
So it's been, almost 20 years, and we've so you've been through some cycles. I wonder, kind of what's been your experience? I mean, I think most notably 2008 was a, a piece of history that stands out in people's mind related to real estate. And now currently we're in a bit of a unusual market, to say the least. Maybe speak to your experience through those times and maybe relate them if at all.
Absolutely. So, I worked at Lehman Brothers prior to the GFC. So, a lot of my former colleagues and friends were there when Lehman filed for bankruptcy. So, I've seen a lot of this firsthand and secondhand. I agree that this is a little bit of a different environment than during the GFC, but real estate is a little cyclical. There are ups and downs, but those ups and downs kind of scale up over the long term. And so it's made me a much more conservative investor. I don't I don't just see something and hear a pitch and want to jump right in. I'm highly analytical and suspicious of things that sound too good because usually they are too good.
Yeah. Yeah, we've you learn that, and I remember I was when 2008 came around. I was very early on in kind of anything to do with real estate, but I remember like friends of ours just talking about how their house had been appraised and it basically had like doubled in value in 9 months or something like that, and it was like,
Yeah.
this is amazing. Everybody was and I guess we had a similar situation here recently with multifamily, and that valuations went up so high so fast. that it you know it's exciting, but realistically, like you said, being a little bit more conservative and thinking maybe that's too good to be true, or at least too good to last. If you can sort of catch that timing right, great. But otherwise, it can be a challenge. Why? It seems like mostly you're dealing with student housing and senior housing. I know you also are in multifamily, but would you talk about sort of the different asset classes and sort of why you like one over the other?
Sure. So I would say I like them all. I don't like one over the other, but they're leveraging different demand profiles. Multifamily is the most straightforward of the three, without a doubt. Um, the US has moved from more of an ownership type market where people had historically had large savings and been able to buy single family homes. We've moved to a rental market. And that demand is very significant across the country, and being able to provide housing to all spectrums of people, ages, and demand profiles is a huge part of the market. You saw a Blackstone sale earlier today of close to $1 billion of real estate to a public REIT because there is so much demand in the market for housing. In terms of student housing, it's similar to multi, but also wildly different. So your anchor tenant is really the large state university or private university. We're targeting universities with over 20,000 enrollment, with strong demand, strong enrollment increases, and that is driving the demand. The properties don't need to rent to students. They can rent to anyone, but it's primarily students because you don't want to live amongst a bunch of college kids, right?
Yeah.
I mean, it's
Yeah.
it's a little bit self-selecting. We have 12-month leases on, which is different than what the school year is, right? And we have parental guarantees on those leases so that the students are backed by a real credit guarantor on their lease, their parent or other family member. And we lease these by the bed instead of by the unit. So a 3-bedroom multifamily unit, we're chopping up into 3 different pieces and renting each bedroom. So we're able to get a little bit greater revenue than you would get on the multifamily side, but it's more operational. We have an annual leasing cycle where we need to be full before the start of the upcoming school year, or else we miss that entire year. Students aren't changing accommodations during the school year for the most part. So it's a different type of business and a different type of property. On the senior housing side, it's leveraging the opposite end of the age spectrum, right? There's huge aging of the silver tsunami, as it's been called. The baby boomers. There's increased need for care, and so the idea is to provide them whatever level of care they need and accommodations as they either sell their single family home and move into another residence, or just want to be amongst other contemporaries moving out of whatever multifamily dwelling they're in and be more with others in their age group.
Yeah, and thank you for describing all those. I actually wanted to kind of dive in a little bit more on the senior housing side of things, because I hear a lot about sort of the aging boomers, and that this is a big asset class for the coming future. And I don't actually think I've had anybody on the show that has had any real knowledge or experience in the senior housing space. And so I know that there are a couple different models as far as management and things like that. I wondered if you could go in a little bit deeper on the senior housing and what maybe what some of those different niches are, but and then specifically what you focus on.
Sure. So the the scale is based on level of acuity, how much care people need. On the lowest end of the spectrum, there's something called active adult or age restricted multifamily, where it's called 55 and up. Generally, the residents are 70 and up because they don't really have a need to move until, or an interest in moving until they're older. And that is a newer sort of property type. It has historically started in the senior space in independent living. Independent living is a little bit of a step up from active adult because there are there's a single dining hall, there's meal plans, and it's more of a self-enclosed living quarters. Active adult is more independent. There isn't a restaurant, a cafeteria. There may be places where people dine, but they're not just dining within the property. Independent living is a little more structured and institutional, but still no real care is being provided. Above that, assisted living, people are getting help with activities of daily living, getting dressed, taking medication, things like that. But it's not a hospital style setting. Um, After that, you have things like memory care, where people have Alzheimer's and need some additional care and coverage, and those have locked quarters so that people don't wander out and you know uh, have greater risk associated with them. And after that, you step all the way up to the acuity of skilled nursing, which is very similar to a hospital style setting where people are getting high levels of care and physical therapy and things like that. Now, there are different services that can be provided in the different properties depending on needs and so forth. And from an ownership standpoint, there are situations where you have a management company that is just managing the property and they get a fee for managing the property, not dissimilar to multifamily or other property types. But on the higher acuity side, skilled nursing and some assisted living, there are ownership structures where you own the property and then you lease it to an operator. And they are responsible for everything. It's a triple net lease like in retail or some industrial properties. And so there's a lot of different structures and ways to own and operate those properties.
Yeah, it seems, sort of the higher you get up in terms of levels of care, the more of a business it is than necessarily just owning the real estate. I mean, any commercial real estate is running a business to some extent, but it seems more and more intense unless you're, like you said, you're in that sort of triple net space and you're just leasing out the building to an operator. What do you prefer? Do you sort of spread it out across different levels of care, or how do you like to operate that?
Sure. So I've operated and owned across the full spectrum. Uh, I'm more focused on the lower acuity side, active adult and assisted living, as opposed to skilled nursing, because the government has really pushed people out of what are higher cost settings to the government, because the government is often paying for the resident. So through Medicaid and Medicare, they are reimbursing the facility for the expenses related to the resident. And so they want to pay less to provide similar levels of care and are pushing people from skilled nursing and long-term acute care hospitals to assisted living, where they're able to get the same, if not better care, and we are able to get private pay residents as opposed to government pay residents in those facilities.
Okay, makes sense. I would, and so you have in multifamily we have third party property management groups, and that would be the same in senior care, where you're going to have just different third party property management groups that are geared towards that specific population.
That's exactly right. And there's been a lot of interest in that space over the last year plus since COVID, because finally, the silver tsunami is starting to move into those facilities and there's huge demand, but there isn't huge supply, despite the fact that people have built a lot of senior housing over the years. The affordability and the right style accommodations aren't there for a lot of seniors.
What do you see, kind of, I think the silver tsunami has been spoken a lot about, but what do you see the next 18, 24 months looking like in real estate? Obviously, there's been a lot of talk about interest rates over the last couple of years. We very recently, from this recording, had talk of, are we in a recession right now? I guess people have been talking about that for a little while, but we just got a sort of negative jobs report, and there's been some significant fluctuations in the stock market. What do you see kind of these next be it 12 to 24 months looking like?
Yeah, if I had a certain answer to that question, I'd be a lot better off.
Yeah.
Um, I,
Knowing you can't predict the future, but someone with a lot of
yeah,
experience in the
my my thought is, and I've felt this way for a while, is that we're entering a bit of a stagflation environment where, as you noted, growth is slower, but we still do have rising expenses, rising costs. So the Fed, I don't think, has perfectly been able to stem inflation, but as you noted, jobs have been affected, right? People are looking to scale back their expenses because other things are rising, right? Like insurance, for example. And that has been a big challenge in the real estate space, but overall my outlook on real estate is positive. Real estate has a lot of demand drivers behind it, particularly residential real estate, multifamily, student housing, senior housing. People still need a place to live. And that, I think, is the biggest piece of the demand driver, right? I mean, whether or not rents continue going up, occupancy will still be there. And I think over the long term, real estate is a great place to invest. It is less correlated with the stock market, and there's a lot of opportunity. We also believe, that with the dislocation in the banking environment, private credit is an attractive investment for investors looking for a diversified investment portfolio where you're able to get greater cash flow today than you would have been able to get on the credit side a few years ago. And it's lower risk than a stock market investment because it's not equity. It has equity protection below it.
Yeah. Yeah, it makes a lot of sense. I mean, I think that it ultimately, real estate, the stock market too, like it all goes through cycles, and we've had almost like a a stacking of black swan events with the pandemic, and then a bunch of money being printed, and then a historically fast rise in interest rates. And so it's again, I'm not an economist, but it seems like just a bunch of overreactions stacked on top of each other in an effort to correct something that was caused by the first overreaction in a way. So it's I don't get to make those decisions, but it seems like that correct will probably overcorrect in the other direction and have similar things happening forever. That's my take, but yeah, you've got a much better understanding than
I agree with you completely. Um, you know, we talk about things like black swan events and normal standard deviations in performance, and we've had multiple black swans over the last few years, right? Interest rates, COVID, the GFC. These are, 1 in a million year type flood events, right? And we have them every few years. So it's very hard to sit down and comfortably predict what's going to happen because we don't know if there's going to be a global war. We have an election coming up. We have a lot of uncertainties hanging over us. And so the question is, where where is a comfortable, less correlated place to be, and how do I build a diversified portfolio across sectors in order to be able to steady the uncertainty that's in the market today.
Yeah, I think that's a great way to state it, right? It's you have to adapt to whatever the situation is, right? So as you mentioned, sort of investing in private credit, that you can add that to your portfolio. Real estate, has ups and downs in the cycle. I mean, stock market, everything has ups and downs. You don't lose any money unless you sell it during that time when it's down, right? So it's like what you need to is I guess diversity of exit strategies, in the sense that don't be forced into having to sell, whether that's stocks when they're down or real estate when it's down, and just give it time to come back around. And as you mentioned with private credit investments, you can have cash flow now. If real estate's not providing a lot of cash flow at the moment, you can have other pieces of your portfolio that might be. So I think that there's just ways to navigate these times, and realizing that there are certainly things we can't control. We have no control over there being a pandemic. We have no control over the money being printed. We have no control over whether they raise or lower interest rates. And so we just have to look at the data that's there and kind of make decisions based on that, what information is available.
Absolutely.
Greg, I wanna switch gears and ask you the questions I ask every guest. The first one is based on the name of the show being Know Your Why. So, what is your why? What's driving you? You've had a lot of success already. Kind of what keeps you going and keeps you motivated.
So I would say it's really just building something that is great and feeling good about myself and how other people feel about me, right? I don't want to be somebody who is go and screwing people over along the way. I want people to feel good about what I'm doing and being partnered with me, invested with us, and want to grow with us.
Yeah, I love that answer. I think, yeah, being someone that ultimately someone that people can trust and you do that by showing it through your actions, and so I think that's a great motivating piece. On a lighthearted side, tell us something about yourself that isn't common knowledge, a special skill, a hobby.
Sure.
It's just something to let people know you better.
I am an avid scuba diver. I worked at a scuba store near my house in high school and a little bit in college as well. And diving in the Northeast is very different than it is in California or the tropics. And it's a lot of fun. So I've been doing that for over 25 years now, and it's a passion of mine.
That is something I have never done, but always thought would be pretty phenomenal. Just it obviously it's a small scale version, but I'm always fascinated by like saltwater fish tanks, and just the really just the beauty of the ocean that we don't see most of the time unless you're actually a scuba diver. So that's pretty cool. Like we talked about my kids before we started recording. My kids were just asking about this the other day for, I don't even remember what reason. We went to Legoland, and there was something that was like sort of a underwater fish scene at Legoland, and they're like, "What?
Sure.
How do we see this?" I'm like, "Well, you would have to be a scuba diver. Or maybe one of the Lego people had the stuff on." But yeah. So then my son, of course, is like, "Well, can we do that?" I'm like, "It's not that easy, but yes, maybe we can someday figure that out." And there's a lot of training and equipment that goes into it.
Yeah, it's something that you can even take them on a lower intensity scale to do, because there are kind of self-contained, almost submarine type devices that people can go underwater with that have air tanks attached to them, so they can dip their toe in the water that way, or even go snorkeling, just to get a sense of the experience, and also taking them to an aquarium. I
Yeah.
absolutely
Yeah.
loved that growing up. So
Yeah, they love the aquarium. I mean, they really are fascinated by it. So and I, like I said, I would love to someday just kind of see it in person. So it's a pretty cool experience, I'm sure. When people hear this and they want to reach out to you, what's the best way to get in touch?
so I'm on LinkedIn. My email is greg@ashlandcapitalfund.com. Our website is ashlandcapitalfund.com. I'd love if people reached out, asked me questions, said hello, and happy to speak with anyone.
Awesome. We'll make sure we get that in the show notes. My final question for you, Greg, is what piece of advice would you give to someone who wants to get started in investing? And you can take that, active or passive, but they hear this, they're inspired by what you've done, and they're kind of interested. Where would you tell them to get started?
I would quite honestly say it's starting as a passive investor is the best way to start dipping your toe in the water, to start getting the experience, to learning more. And Ashland has investments that are available to investors across real estate and private credit. And we'd love to engage with anyone looking to learn more or try it out.
Yeah, it is really a good way to get it, kind of I don't know, dip your toe into the real estate investing world, rather than thinking that you have to go buy a duplex and manage it yourself and all of this. That you can get
Right.
a really good picture of what it's like to be in real estate at scale by being a passive investor, because most of us will very willingly chat and answer questions, and you'll get a lot of insight into how it all works. So I think it's great. Well, Greg, thank you for coming on the show today. Thanks for taking the time out to talk to me. I'm sure our listeners will get a ton of value out of this episode. I think some great tips you've shared. So thank you very much for being here.
Thank you very much for having me, Jason. It's been a pleasure.
And folks listening, I know you're going to love this episode. Make sure you connect with Greg, and please like, rate, and review the show so we can get more great guests. Thank you all for listening.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?